And I've been saying, and I said last week that gold and oil are going to be moving in the same direction. And that certainly happened today. We've been seeing them moving in the opposite direction because oil had been going up until its recent correction, and gold was going down because gold was following bonds down. Gold and bonds were falling at the same time, but that is not the correlation.
Welcome to a compelling discussion with Peter Schiff. In this video, Peter delves into the intriguing correlation between gold and oil, a relationship that has been anything but straightforward. Discover how recent market movements have defied expectations and learn about the driving factors behind these shifts. As Peter unravels the complex dynamics between bonds, the ongoing Gaza-Israel conflict, Middle East geopolitics, and their implications on the global economy, you'll gain a deeper understanding of the challenges and opportunities in today's financial landscape.
And the reason that I was pretty sure was because we had that outside reversal day. We got the jobs report on that Friday, which came out much better than expected because, people don't look beneath the surface to see all the crappy jobs that were being created. They just look at the total number and they don't bother to check, how was that comprised? The fact that we lost 800,000 or 900,000 full-time jobs and replaced them with 1,000,001 lousy, low-paying part-time jobs is not good news. And the fact that all these jobs went to people who already had jobs and would prefer not to have a third job, again, this is evidence of weakness, not strength. But I already addressed that in the other podcast. But when we got that big number that shocked the markets, gold tanked, well, $10, not really tanked, but it dropped $10. But in doing that, it took out the low from the previous day and then rallied and closed above the high from the previous day. And I said, I think we've seen the lows. That is a significant outside reversal day. Today, gold was up better than $60. It's up $64 on the day, one of the biggest up days we've seen in some time in gold. It closed at $19.33. We're $110 above the low from Friday. That is a significant move in 1 week for the price of gold. And I've been saying that the support was below 1900. I knew that anything below 1900 was a good buy. Now, it got further beneath 1900 than I expected. We got to about 1820-ish on Friday morning. But here we are, 1933. We've almost recovered the entire decline because before gold got clobbered, and the reason it got clobbered was, bond rates went up. But it was about 1950. That's where it was. So gold has almost done a complete round trip. So the money has come in to buy the dip in gold, which is what I expected. The next thing for gold to do is to get back above 2,000. That's where the resistance is. And to see if we can test that resistance and then break through. Because once gold really starts to move, let's say we take out 2,100, I think these 64 days will be par for the course. I think we're going to have a lot more of these days. In fact, I think we're going to have bigger days. I think we're going to see days where gold is up more than $100 a day because gold has a long way to go to catch up to where it needs to be. By the way, silver also had a big day today. Let me check the price. Silver had the same type of outside reversal day that gold did a week ago. And so I said the same thing. And here we are up 92 cents an ounce for silver today. We closed at $22.73. So silver, gold, both looking good. In fact, it wasn't just regular gold that looked good, but black gold. Oil was up about $4.50 on the day, up $4.57. 86.37 is where we went out. And I've been saying, and I said last week that gold and oil are going to be moving in the same direction. And that certainly happened today. We've been seeing them moving in the opposite direction because oil had been going up until its recent correction, and gold was going down because gold was following bonds down. Gold and bonds were falling at the same time, But that is not the correlation that ultimately is going to persist. It's going to be the opposite. Bonds have rallied over the past couple of days despite news that should have sent them lower. I think what's supporting the bond market is the situation in the Middle East, in Israel, with what's happening in Gaza, and the potential that this could blow up into a much bigger situation. People are downplaying this, I think, the significance. Janet Yellen was out there today. I'm not sure where she was speaking, IMF or someplace. And she basically said, oh, it's nothing to worry about, right? The situation there, it's not going to make any kind of impact on the global economy. So it doesn't really matter, right? She really was downplaying the risk of the situation. And first of all, it's another problem on top of a mountain of problems, right? It's the last thing we need. It's not like, everything is great and now we've got this problem in the Middle East. Everything is awful and now we've got another problem that we've got to deal with. But she is underestimating the potential there. I mean, there's no, I don't think, good way out of this. I mean, Israel is in a very difficult situation. Netanyahu has no good options, in my opinion. I mean, he can't do nothing, right? He's got to have a serious response to a very serious threat. But again, the minute he does that, you've got all these Arabs all around the world that are very sympathetic to the Palestinians and what's happening there. And even in the United States, I mean, if you have all this sympathy being expressed for the Palestinians in America, imagine what's going on in Saudi Arabia and other countries over there. And I just read, and this is exactly what I said a week ago, or the last podcast, that now the Saudis are backing out of that peace deal, that treaty that they had going with Israel. Of course, now they can't do it, which again, what I was speculating on my last podcast, that may have been the very reason, the impetus for this terrorist attack, and why Iran may have been pushing for this attack, because they wanted to derail that Israel-Saudi deal. They didn't want that. And so now they can't have it because the Saudi royal family, can't do it. But there is no easy way out of this. This is going to get worse. And it's very unfortunate that this is happening. And, I don't know how bad it's going to get, but it's not insignificant. And it's going to have an impact on the oil price, which was going up anyway. But that's a problem. And, Janet Yellen maybe hasn't noticed, but we've used up most of the strategic petroleum reserve. This is not a really good time to potentially have some kind of disruption to the global oil supply, but it could happen. And there was already going to be upward pressure. And we're spending more money. I mean, there's no question that what's happening in the Middle East is going to lead to more money being spent, more aid, military aid, whatever it's going to be. Again, I mentioned these defense contractors. They're not going up because they don't expect to get more orders. Well, where's the money coming from, right? Bigger deficits. That's the last thing we need, is bigger deficits. We got a bond auction yesterday. Horrible auction. Big tail. The bond market tanked when, the Treasury auction happened. Bond prices, I believe, would be much lower. I think it would be above 5% right now on the 30-year. We'd be making new highs in yields, but for this situation, I think, in the Middle East, which has created a bit of a bid in the Treasury market. But that bid will not last. In America, American families not only could pay higher taxes to pay for the Second World War, but they had extra money left over to buy government bonds. Who bought all the government bonds to finance the war on terror or, the war on COVID? The Fed. You never saw, like during the Second World War, you had people going all around the country, right? The government had all these celebrities, Bob Hope or whoever these people were. They would do these war bond rallies, and they would go from town to town, getting the public to buy these war bonds to help pay for the war. We didn't do that. We didn't go anywhere trying to convince anyone to buy bonds. The government never said, "Hey, we're going to fight this war on COVID, so we need help. We need you to lend us some money to pay for this." No, they was like, "Don't worry, we're going to send you money. We're going to send you stimulus checks while we're fighting this war. Nobody has to do anything. We just print the money." Yeah, they printed some money during World War II too, but not like this. We need politicians with the courage to do something about spending, do something about the budget deficits, that we can't stay on this path. It's unsustainable. We've got to have some combination of tax hikes and spending cuts. And the only taxes that he said we needed to raise were taxes on the rich.
As we conclude this thought-provoking conversation with Peter Schiff, remember that staying informed and adapting to the ever-changing financial landscape is key to making wise investment decisions. The interplay of gold, oil, bonds, and geopolitical tensions in the Middle East can significantly impact your financial outlook. We encourage you to explore further and stay vigilant as you navigate these dynamic markets. Thank you for joining us, and until next time, stay informed and invest wisely. Please like, share, and subscribe to our channel.